Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is for Thursday, March 27th, 2014. We had a little bit of a down day as far as the averages go, but we really saw some real weakness creep into the market, both internally and in some of the key intermarkets. So we're definitely going to dig down deep into that tonight. I'm not going to look at the individual sectors so much, because there definitely could be something brewing here. I want to make sure that we really highlight that. The ES lost 16 handles on the session. The NASDAQ got thumped to a tune of 51 points on the downside. So that was a real bifurcation with real weakness coming out of the NASDAQ today. The advanced declines were not good on the New York side. We were minus 1,000 issues there, but on the NASDAQ side they were a disaster, minus 1,650 issues. Put-call ratio was fairly in line at 0.93, so we didn't get that climactic spike, so we don't have to worry about bids coming in the next session because of that anyway. The 10-day trend will inch up a little bit here. We did record 1.74 on the closing trend today, but we'll take a look at that in just a little bit on the with a graphical picture of where we stand with the trend. But first, let's move on to the charts and take a look at where we stand. All right, first thing I want to take a look at is the just the pure price action of the ES. We're still within the boundary of the channel. We touched the top of the channel here, and then since then have gone sideways. We've had a couple of decent days to the downside. Today actually was the second lowest close of the entire consolidation range here. We do have this little candle that was a gap down, just kind of hanging there by itself. We didn't undercut that low, but this is certainly something that the bears could build upon, but it has to be built upon. Right now, this doesn't mean anything in and of itself as far as pure price goes. We really need to lose the low close of this previous candle here to really set things in motion. Right now, we're still caught in the grips of this trading range. I'm going to zoom it out for you to take a look at. So until we resolve this trading range one way or another, the ES is still on a pure price basis pretty just neutral right now. Right now we're going to switch over to the NASDAQ futures, coming down to, and we're getting precariously close to the trend line that's really defining price action right now. You can see that this is a little bit different than the ES side. We've got relative weakness in the NASDAQ. We don't have that lateral consolidation here. We've actually been making a series of lower lows. We pretty much just matched the previous low here on the move, but the big development here technically is that we substantially made a new low on this move. Not only that, we're right in the area of the breakdown area for undercutting this key support level that's been in place for months and months and months. If the NASDAQ closes and follows through below this support level here, this is going to be a notable development. The DTLs, the diagonal trend lines, are definitely something that's not a primary support level, but these are very notable in defining what the overall trend is. Not necessarily something you really trade off of per se, but it's very notable. It should be figured into your mix as far as the overall strength or weakness of the market going forward here. So we're right in the area of that previous level, and this is going to be of critical importance to the market, especially since the NASDAQ has had relative weakness versus the broad market, as we just saw with that lateral consolidation still in place in the S&Ps. All right, folks, first up is a look at the ES futures. ES futures declined back to the 6/8 level. We thought this was going to be an important level, and so far it has been. A couple of reasons. It's the 6/8 level is definitely more meaningful in the GAN box than the odd numbers. The other thing is that it's also the origin of the breakout. It's this little double top right here, which was also the area for the breakout to the drive up to 1875. So this is an important level. If we lose this is going to be very notable, and definitely put the 4/8 level at 1812.50 into play if we do lose this on a closing basis. But for in follow through, of course. But for now, definitely a key area that could be gamed tomorrow. If it is lost tomorrow and there is velocity to the downside in the movement, the first thing we want to look for is the 50 DMA, which is definitely going to come into play if we interact with that tomorrow, because that's going to be the first time we've interacted with it for more than a month. So 50s tend to be gamed by the market because it's a definitely an area of interest on both sides of the tape. So definitely keep that in mind for tomorrow. Going to do a little bit of a change up today because we tend to focus on the seeker on the daily charts, but I thought it was important to take a look at what's happening with the Comer. Right now, the Comer, which is the sister study to the seeker, has a 13 in place here at range high, and is starting to roll things to the downside. So while the seeker is only 9 days up in the exhaustion count, the Comer is already 13 up with this exhaustion warning locked in place now, and definitely should be something that you're aware of. If in fact we do retest the high and then print 13 on the seeker study, that's going to be a very critical confirmation that it's time to roll back to the downside. All right, here's the NQ futures. The NQs have settled fairly decently below the 6/8 level. This is the first time since we've gone up to test this 8/8 level, so that's a pretty big deal. We're obviously settling back down below the 50 DMA again, and if we do continue to the downside, the static trend line here is going to be the one to watch. That's going to come in about 35.05, 35.06, and that'll be the level that the market's going to seek if we do continue to the downside. To the upside, the 10 EMA has been the sheriff in town for the last 3 sessions, so all 3 days this week have been defined by the 10 EMA. So keep that in mind if we do roll back to the upside. One of the things that was kind of sticking out today was the relative strength that was forming in the QM. The oil futures were really strong during the day, pivoting around this 1/8 level, finally settling above it, and pushing up towards the 200 DMA. If we take out this 200 DMA, that's going to be a pretty notable development, especially since this was really not a risk-off scenario. This is really defensive posturing, really kind of disconnected from the other things that were happening in the market today. So definitely keep an eye on this, and if we do go to the upsides, we're going to wind up putting this static trend line in play. Gold futures, on the other hand, were not a source of kind of a safe haven of any kind today. We did decline back down to the 200 DMA, so we're into a really critical area here where the 50 DMA is converging with the 200, and we're 7 days down now as of the previous settlement. So this is a pretty key area. If we lose this, we're going to wind up opening up the door to this 1250 area, which is the 4/8 level on the Gann box and the active static trend line. If the market reverses and goes back to the upside, keep an eye on the 10 EMA, which is going to at least for now in the short term cap trade to the upside. Taking a look at the 10-day trend now. The 10-day trend is at 1.23, so it's not that far away from getting an oversold reading. If you get to that 1.35 area, we're going to wind up with an oversold reading, and then have to get some relief either laterally on the chart for the broad market, or get a relief bounce. But for now, there's more room before we get to that level, so definitely keep that in mind. All right, here's a look at the SOX NDX cross. The SOX is still relatively strong versus the NDX, which is a small break point here, but we've got to break out above this previous high. If we break out above this previous high, that's going to be real positive development for the market. But until then, it still has the potential for being a double top, and in fact, it's probably fairly likely just because of the angle of ascent here that we've had. We're really starting to go parabolic here, and look how aggressively the market has been rising to the upside. Here's a look at the NDX versus the S&P. You can see that we lost that breakout level. We're starting to see some real relative weakness developing in the NDX versus the S&P, and this is most unwelcome by the bulls, and certainly something that the bears can point to for building a case for some more downside in the market. Here's a look at the bigger time frame. Here's the weekly chart of the NDX versus the S&P. We've come down to undercut that key breakout area, and really need to hang on to that. It's okay if the market spends a day or two and can circle the wagons here and roll back to the upside, but if it does not, this is going to be a little excursion to a new high that probably needs to be corrected. All right, now here's the cumulative advanced declines. This is probably the most important one. The New York side is definitely taking a turn for the worse here and starting to roll to the downside just a little bit. but in the daily time frame, it hasn't really done any real meaningful damage. The Nasdaq side, however, you can see that there's clearly a lower high in place, and that's qualified here, and we're starting to roll back to the downside. So we're really starting to see some pretty acute weakness in the Nasdaq side of the market. Now we're going to bump up to the weekly time frame. The weekly time frame looks still is just fine for the broad market side. The New York side is still hanging up there pretty powerfully, and not really showing any relative weakness yet. But the Nasdaq side of the market, we've got this. It's really obvious now that this lower high is confirmed, and we're really losing leadership from Nasdaq. And a lot of the high beta stocks got absolutely slaughtered today. There was just basically a bid vacuum this afternoon where nobody was willing to step in. So this is a real cause for concern, especially since the Nasdaq side tends to lead what the S&P side is going to do, the New York side. So if the New York side does start to roll down, that's going to be it for the market, and we're going to wind up being in a correction. No questions asked. All right, folks. As always, this has been Rich for Tradesight. Thanks for listening. And if you find these videos informational and useful, please give us a thumbs up. Thanks.